Hi, I'm Brandon Macdonald, CEO of Fireweed Metals Corp. We have three main projects. Our flagship projects are in Yukon Territory, Canada. One being a district scale kind of best-in-class zinc project. The other being a really large advanced tungsten project immediately adjacent to each other. So I'm happy to be here.
Good to see you. It's been a while.
It has been, yeah.
But we did catch up lunch in the summer, didn't we?
Yeah,
we managed
June,
sneak
May,
in
July, yeah, something like that. It's all a blur.
This year, I know. I know it has been. Hey, so loads of things to talk to you about.
Yes.
Okay. We'll start with the conference. You're over here. Yeah. I'm not sure why you're here. You've got all the money you need now. But go on. Tell us who you're here to meet.
Yeah, well, look, it's good, and actually, I missed the first day of the conference, which we'll get into, which was not the original intention, but had a bunch of meeting investors, really focused instead of big PE funds or whatever, which I have kind of existing relationships with, and I can meet with as and when I want. Focused now on retail, family offices, et cetera. Okay. Really seeking liquidity, and and also people in the industry, right? So one of the nice things about say Minds of Money, and I like the one-to-one as well, but one of the nice things about Minds of Money is that there is the conference floor, so you get the serendipitous encounters, which I think that intel that you get just on the show floor is also really valuable, and you don't know it until you come back and you're like, oh, like that was useful, right? So
no, I agree with that, and I think Minds of Money is a little bit PDAC-ish, PDAC Junior, PDAC Light, where you get these industry partners, you kind of hear a few rumors and you get a few clues as to what's going on out there. But I'm more interested in the investor side of things. You missed the first day because you had to jump on an airplane, and go see a group. I think most people heard about it, but for those who haven't, what happened?
Yeah, so I was in Geneva on Tuesday, and had to cancel my meetings because I got an invite to go, and sat down like Dragon's Den style with the Lundin family. Like it's like a table like this, right? And there's 8 of them and 3 advisors.
Half a mile away.
yeah, basically, right? But
megaphone.
And credit to them, they didn't do anything to make it particularly intense. It was a very good conversation, and they're smart people who were asking the right questions. But what came out of it is basically a $20 million commitment from them. So then with existing shareholders, went live Tuesday night, our time here, after I flew back, and I was on the back of a BA flight from Geneva, like furiously like crammed in, trying to crank out a news release. So we went live with the financing, and then by morning Vancouver time. So
break it down for us. It was obviously it was a bit more money than you expected, which is great.
I wasn't sure what their commitment was going to be, but $20 million makes them about 20% shareholder collectively. So then in most of our I think once we look at the full amount of shares out with the financing, I think they'll be right around 20, maybe slightly under. So
are they aiming for that under the 19.9?
No, because they aren't necessarily. Depends on how they deploy it, because they've got their holding companies, and they've got some individual subscriptions as well, and so.
Are the terms settled? The quantum, but are the terms and
the exact allocation is not settled.
Okay, fine. Who else came on?
So we had most of our big existing shareholders re-up. Larry Childress, who's an American guy who previously was the largest shareholder. He's re-upping. Tech Resources re-upping. Our chairman, putting in a couple $1 million.
Right.
So
So as you say, the register is looking quite institutional for a sub-$100 million company. Well, I guess it'd be a little bit more so. Pretty good on that front, which is always the bane of every CEO's life. How do I get more institution involved? You've nailed that. You've kind of gone the other way around. Now you need liquidity from retail and get people excited. To do that, they're going to need to understand a couple of things. Zinc market, tungsten market. Zinc market, it doesn't get the love of precious metals, but it's a little bit better understood.
I think it's somewhat understood, right? Like, and it's LME traded, right? So you see minute by minute pricing, somewhat transparent.
Somewhat transparent, but not a lot of zinc companies, certainly not a lot of zinc companies doing well or being paid attention to. So there is that. That's what I refer to. When you kind of need this kind of sentiment, momentum type stuff, you need a bunch of people around you sort of doing well too. Tungsten, even less so. So everyone wants it apparently, but what is it?
Well, so the market is I think 80,000 tons, 80 to 100,000 tons, depending on recycling and stuff like that. And this is like smaller than a cobalt and stuff like that, right? Like this is a niche market, right? So
How does it work? I'm intrigued because you talk about cobalt and crikey, you talk about opaque. That really is opaque. But some of those companies are flying now because people go EV batteries. That's all I need to know. Yeah. It's in a battery. Tungsten, we sort of understand some of the kind of more, sexier applications, but what's the market look like? Who runs it? How do you?
Well, China collectively runs it. So 85% of really supply of tungsten is China. Yeah. And that's mine supply. It's not like, many other commodities. They're importing a bunch and then exporting, higher value products. Like, they're mining it, right? So that is both the crisis and opportunity in tungsten. That they fundamentally produce on quotas, which creates an artificial price. Yep. So you're now competing with people who don't have a profit motivation, right? So that's
well, at different parts of the food chain, they'll select where. That's the problem. Right?
So they're trying to capture that as much as possible, right? And they don't terribly want foreign competition, right? But the Western governments and Western companies do, right? This is 85% dominance. This is like rare earths, right? And this is a metal that although it's niche, tooling steel, like aerospace applications, et cetera, there's no substitute, right? So without it, the economy grinds to a halt. So you can understand the anxiety governments have, for metals like tungsten and why it's on everyone's sort of critical metal list, right?
Yeah. No, I do, but I've seen a few tungsten companies come and go as a result because the funders struggle to understand it because the market is opaque and it's small. Yeah. Right. That's the kind of problem here. With the kind of advent of kind of the geopolitical situation this year, Russia, Ukraine, energy crises, COVID, supply chain. Also, critical mineral lists are important again. Yeah. They've always been around, but no one really paid much attention to them. It's like, oh yeah. You keep saying supply demand fundamentals to me, but so how do you take advantage of it? Because you've got two potentially big projects. You've got some money now. Yeah. So give me the plan.
Well, I think unlocking value certainly in the tungsten project, but the zinc as well. It starts to become political, right? Like these projects being next to each other. I mean, the reason we picked up the tungsten project was because it was next to the zinc project. If it we weren't looking for an even more niche metal to get involved in, right? Like, I have enough headaches, like trying to market a zinc company. I didn't feel like, let's go the masochistic route and pick up a tungsten project, right? But immediately adjacent to others. So it's one lobbying effort for all the infrastructure. Now we have a road to the project. Government's committed, $70 million to improving access to the project. Okay. But we need more. And I would like a power line. Yeah. So this is all like with two projects, you've got kind of twice the incentive for the government to come in. And Canadian government's committed $2 to $3 billion for infrastructure to critical minerals projects. So, that's me, like, please pick me, right?
They'll focus on the last mile bit first, ironically. But I saw you on stage yesterday getting grilled in one of those pitch battle type things, right? And that was one of the main points of attack for you, which was it's so remote, it's so far away. There's a cost to that. That's going to affect your economics. Now, clearly, you're high grade on both, which is super, because that kind of mitigates some of that risk. But you've still got to deal with it, and those roads and infrastructure costs need to be met. Yeah, and it's not going to be met from a company of your size. So how do you help yourself?
Yeah, well, look, the road belongs to the government. So it's not currently we call it a road. In fact, it's a designated highway. Right. You can actually look at it on Google Street View. I don't know what the hell the Google Street View vehicle was thinking going up there, but you can look at it. Right. And it's a trail, right? So it needs to be a road. It needs to be able to handle, a significant amount of traffic per day, particularly for the zinc mine, right? Now, so we got to get the government to do that. Now, then, assuming we have the road, that doesn't change the fact that we're 800 kilometers from port. Now, that matters more for zinc than tungsten, because for tungsten, your concentrate is about 10 times the value. Yeah. So like the Cantung mine, which was the old tungsten mine that North American Tungsten ran, who was the former owner of our Mactung asset, they trucked from there, which was not far south from us, all the way into eastern U.S. And you would think, like, you're trucking concentrate that far, that's insane, but it's a very high value concentrate. So
clears in the word, right?
Yeah, so you can do that. Yeah. So once the road's in the condition, logistics are, always an inflation. You're getting fuel to site and all these things. It's just that incrementally higher for sure. We think we have the grade to more than overcome that. But for the zinc project, that's a big deal, because your concentrate's worth $2,000 a ton or whatever, and that's like, if you're spending $200 to get it to your partners for the smelter, that's material. Yeah. And barring the invention of teleportation. There's no escaping that we're.
Well, tell me about. Okay, we understand. We understand a little bit more about the tungsten market, and I think that you can argue the case of scarcity because it's not a big market, but it will also with the China factor, like rare earths, it's problematic.
Yeah.
In the sense that they can make things difficult for you. So that's something I suspect you'll try and work out and come back and let the market know how that thing moves forward, right? Yeah. The zinc stuff, I say, slightly better known commodity, but it has been an erratic space as well. It's kind of made and crushed companies in equal measure. So again, you've got the grade, you've got the scale. Tell me about how that project advances, and what the focus is in terms of percentage terms. Is it 80% on the zinc? And how do you?
Yeah, well, the threading that needle of like the tungsten project is more advanced. It's had a feasibility study. It's actually been through the environmental assessment. Right. So we're looking to proceed to licensing, and you're talking about potentially breaking ground in less than half a decade, right? So
potentially, but what are you doing?
Well, that's what we're trying to do.
You're going to go. Okay, go that first.
Well, look, the problem is if we rely on the old environmental assessment, you have to look at it and you say, well, what did North American Tungsten permit, and do we want to operate within the limits of that? Because if we want to deviate from it, like significantly, they're going to send us back to through assessment again, right? So it's like, okay, that's time consuming in Canada, right? So it's
and costly and all those wonderful things. But we have seen companies come at it differently with different hats on, because we're seeing companies avoiding going through any kind of economic study at the moment because it's going to show them some stuff they don't want to hear. Like costs went up a lot. We're seeing other companies say, well, actually, we need to reduce the size of this thing because we need the capex to come way down because the cost of capital for us would be terminal, right? And obviously inflation and commodity prices and so forth. Good projects becoming marginal. It's a tough environment out there. Do you think that you want to build that out, or is it something you could flip and get some cash and focus on the zinc, or does that give you a good balance to your own portfolio?
I don't think that the two will stay married forever, right? I think whatever happens with Fireweed, I think the zinc project belongs in the hands of a major. I think that's probably what's going to happen in the long term. And every CEO says that, but I that's what I'm saying is the likely outcome, I think, of it. The tungsten project doesn't really belong, it's a niche metal. I think it belongs in like a kind of a dedicated company, maybe with another tungsten or a similarly niche metal, focus on a kind of critical mineral company or something like that. Keeping them together now is good in terms of that lobbying I was talking about, engagement with indigenous groups, et cetera, that this is like, it's one company, one set of relationships. Try to get them further down, and maybe there's a right time to, because we don't get any value for it, right? Spin out the tungsten asset and daylight some value, right? It's not yet, but there could be a time.
We've seen that again recently. We've seen it with the timing's everything in this game, right? We've seen that work immensely. Like projects being taken out of one company, valued at zero, spun out, all of a sudden it's worth 50 million. Like, what just happened? So it can work, but we've also seen likewise, 1 + 1 does not equal 3 sometimes as well. So I'm intrigued about how you move this forward. So two things I want to talk about. Again, back to roads. It's kind of catch-22. How do you what else is going up there in the Yukon that would encourage you to believe that the government will be building roads up there? They will make it easier for you to, and possibly affect your margins by improving connectivity.
Yeah, well, they have, I mean, like I said, they've already committed 71 million to improving the access to our project, right? So they've started to get underway there, but we need more now.
But we need more companies and more reasons for them to do that as well. Is it happening, or do you think you're going to be big enough in your own right?
No, we will be big enough, right? Like there's and that was the basis for that initial investment from them was just us, right? And that was when it was just the zinc project. And now the zinc project is bigger, and now we've added the tungsten project. There's a lot of reason for them to improve that road, right? So I'm not worried about that. I know they'll get around to it. I think the key thing for me is like getting around to it and like on a timely manner with government is the challenge. So that's why.
How far away are you from actually needing it?
Well, it depends for the tungsten asset. Could be 4 years, 3 to 4 years, right? So like that's prompt. I don't know that they can turn it around that quick. Now for the tungsten asset, because you're Mactung,
did you name it that?
No. So that area is.
I was a U2 fan.
Yeah.
Mactung baby.
Yeah.
But
So that area is McMillan Pass. So that's like our zinc project is called McMillan Pass. But the tungsten project came after, and they named it Tung, right? Like, and then the Can Tung mine, which is Canada Tungsten, is
I thought you were Macdonald. Yeah, I thought we were going
I just named after myself. Yeah. Name before I was born, but it's fine.
The other bit of this is right. Okay, we back to the beginning. The important bit. You got this money, $35 million thereabouts. What are you going to do with it? Okay, because the good news for you is then we're running around the streets, chasing money, trying to make investors happy, and you got the money now to give you a bit of breather room to focus on what you want to be doing and do best, which is like get after the project. So what's next? Yeah, well, that's a junior mining CEO's life is like starts with fundraising stress, and then you get the money and you have an hour where you just like kind of like and then it's all like execution stress. Right? It's like you're like, oh god, like so because we had our biggest ever year in 2022 in terms of drilling. Yeah. We're trying to double that next year. Right. Okay. So it's like it's non-trivial. It's to go from what was already your biggest year and required additional camp, capacities like that. It's like, okay, now we're gonna double that, right? Yeah. So to what end?
So the main thing really that drove the scale of the commitment from the Lundin family was, we were on the project and doing a site visit, and Adam Lundin was there, and he was, asking me clearly to him and us. He looked at our program and you're like, okay, you guys are kind of like doing 3,000 meters, 4,000 meters. 2,500 meters. Like it was just kind of like very slowly moving it. Yeah. And it was like, well, what does it look like if you can be unconstrained? Like how much can you attack this? Because the project is, the great thing about having a big project as a junior is, it's a big project. A major's going to buy us. The bad thing is like, oh my God, this is a lot of money. Right?
Exactly. I always say to people, don't talk to me about district-wide opportunity because that's a liability as far as I'm concerned. Yeah. But okay, Lundin family, unconstrained approach this thing as every CEO's dream. Yeah. Give me the money and I know exactly what I'm going to do. Yeah. Well, most of them do. Yeah. So what did you say to them? We will drill in this way to get this information, which does what for the company? Yeah, so, we have two reasonably well-known deposits, big ones, and then there was this third one we discovered, a boundary zone, we called it, and was previously named that, and that's where we had a couple weeks ago our best ever drill hit. This was 124 meters of 12.5% zinc. Right. So it's like this project's had so much drilling on it, and we're still hitting the best ever, right? So no resource on that, and that intersection, for example, is kind of like it's a step out, and there's a bit of structural complexity there. So it's like, can I even include that in a resource right now? We're not sure. So there's a lot of drilling that needs to be done there, and I think that. You look at the models of the big takeouts, like in Arizona mining and stuff like that. Like as the resource kind of jumps to that like, okay, clearly this is a standout massive asset. That's when the valuation takes off, and that's when the M&A heats up, right? So that's what we're kind of hoping is that we have no illusion that we're not going to be able to perfectly delineate, the deposits, right? Because they're really big. There's even with the sort of budget we're looking at next year, there's going to be decisions about what we prioritize. Yeah. Which is the district, right, that you're talking about. Is it's like there's a lot of things we could do. We cannot do them all, but we still got to prioritize. We want to basically build the biggest resource we can with it. And that matters now because again we've come off for 2 years where that just hasn't mattered. Yeah. Companies like drilling, maiden resource, updated resource, and market goes whatever. Yeah. So in terms of, I come back to my comment earlier, it's all about timing. So for you, okay, on tungsten, you've given us an indication of time. With the zinc, how do you play that in terms of, do you keep drilling, keep raising money, keep drilling, or is there a kind of exit or a monetization event that you can work towards? Because it's going to require much bigger balance sheet. Yeah. You've said that's not you guys. It's more than likely not.
The building it, I think that with the 35 million we've added, I think that puts us maybe halfway to the point where we're like, okay, we're got all the drilling we need to now we've got our feasibility study and we're into permitting, which is lengthy and it's not cheap, but actually the spend is much less per year permitting than drilling, right?
No, I get the kind of going through the motions thing. It's like mining's kind of in many ways simple in that sense. Hard, but it's simple. Never you go through the motions. I'm trying to work out you and your board in your heads. Where are you taking this through to? What's the liquidity event, monetization event for you and your shareholders? Where you go, do you know what? I think this is as far as we go.
Yeah.
There you go.
Well, how far we go is when the right offer comes, right? Like I think ultimately, like it's not like at some point in time we're like, well, this is it. This is when we sell it, right? That's going to be the counterparty's decision, right? So,
well, it is, but you can affect that. You can affect those sorts of conversations, right? Yeah. And you got the Lundins on, and they've got an idea or two about how building stuff, but they also had to monetize stuff. And again, we've had enough companies come through where they've just gone too big. You're reducing the pool. They're reducing the competitive tension because we're now at 15 million ounces of gold. We're now at whatever 2-3 billion pounds of copper. It's like, okay, there's now 2 people at the party. Right. So and
if you chase scale, I think you sometimes lose sight of economics as well.
And that's what I'm trying to get from you.
And you can also permit something bigger and build smaller. Right. You can't permit small and build big, but you can do the reverse, right? Yeah. So we would, I think, possibly get into that permitting, look to permit what we think a major would want, and then if it's like game time, it's like, okay, well, what can we finance, right? And maybe literally have, kind of 2 feasibility studies of like, plan A and plan B, right?
Makes sense.
And now, being backed by a group that is mine builders, are mine builders, and have the wherewithal to make that happen, we can do that. I think proceeding as though you're going to build, I think, is the right move.
Yeah.
And if someone along the way wants to take it off your hands, that's absolutely a conversation you should have. I think it's equally dangerous both ways. This is mine. I'm going to build it. I want to build a mine. I'm in mining. Because I'm an exploration geo. Should I really be building a mine? I don't know, right? So obviously you got to surround yourself with the right team. But I think that this is my project and I got to build it. I want to be the mine builder. It is bad, but I think also there's no way I'm building this. Like I just got to sit back and wait for.
Yeah, no, I know. I was just going to have a real conversation because, you get CEOs come and go, we will take it through to a build, because you can't say you're not going to, because it may affect your ability to negotiate a good price at the point you want to exit. So I get all of that sort of stuff. But at the same time, dose of realism, like I'm an exploration guy, I've got an exploration team. Chances of building a mine building team around me is increased with the Lundins on board. But they've got a lot going on.
Oh yeah.
Right? And those projects taking a little bit longer than they thought. They're great at finding and getting money. Yeah. And they're good at building mines, right? But they're in a new phase now where they've got to be, I don't know what they're doing in terms of risk mitigation, in terms of getting away from South America a little bit, or trying to balance the portfolio out. This seems like a good move for them into a commodity which I don't think they're necessarily known for.
Well, I mean, Lundin Mining has Neves Corvo in Europe that mines zinc, right? So,
right. Okay. So that's where the experience comes from. Okay.
Yeah. And I don't. There's no way I can predict now what we're going to do and when. Right. I don't know. What I know is that the bad thing is that you struggle in all these bad markets and you're diluting and you're raising money and it's painful. You're trying to push it along, and then when the market gets really good, that's the M&A cycle. The majors don't have M&A mandates when the market's bad. No. You could argue that maybe they should, but you look at it in terms of their share price, our one of our larger shareholders, Teck, world's 3rd largest zinc miner. They're like a triple or quadruple or quintuple in their stock in the last couple of years, right? So in terms of the amount of paper they need to issue to buy a company like us, actually buying us in a bull market may not be more expensive.
Yeah.
Weirdly.
It's all relative.
Yeah, it's relative, right? So we've gone up, but so have they. So I don't know when that M&A cycle starts.
So they've got lots of other factors and considerations.
We want to make it as easy as possible for them to choose us when whether it's a Teck or a Boliden or a Glencore or whoever the zinc major is that wants this. We want to make it easy for them.
Right. Today's conversation, I haven't been digging you out about what you're doing technically or on the ground, because I don't think so. You've been doing a great job, right? That's clear.
My team has. You pick good people and you get out of their way. Right?
Absolutely, right. So that's a great. So the fact we're having a conversation that we are versus me saying, well, that particular drilling hasn't really kind of done too well. Targeting sucks, or your modeling sucks. This is about you've hit that next phase now. Yeah. Plus 100 million market cap. People will start noticing you. You've got to get the retail in here. So you message the retail about what this looks like going forward and why the growth component is still there. What would you say to them?
Yeah, I think looking at the shareholder registry and the quality of shareholders, there's no doubt if you look at this and you say, yeah, it looks like a great set of deposits and it looks really hard. Yeah. You are right, right? Yeah. This is these are amazing projects and they're going to be hard. They are not easy. But you look at the shareholder registry and you see that this is, the Lundin family, Teck, et cetera, who look at this and say, hey, that's going to be hard, but it's going to be worth it, right? And it's the assets are so rare in terms of scale and uniqueness, like they're the zinc asset of this generation, this coming bull market. It is the tungsten asset. Well, it's the tungsten asset of several markets, and it's not happened. Like hopefully we can get that over the line. So that's people. When you're looking at hopefully the bull market's coming, you want to pick the projects that are best in class, and understand that every project comes with warts. Ours do, right? And so hopefully they have some confidence in the team, and say this is a challenging project, but this is the group to crack that nut. I think we are, right? So that would be the message of you're not going to find another project like these in terms of scale of opportunity, and we get that it's not located in the perfect part of Western Australia or whatever your ultimate ideal mining location is, right? We get that it's not easy, but we're committed to it. We're going to make it happen.
It's like dating. You're going for a 10 out of 10. For a very disappointing time.
Yeah.
7 out of 10 is not bad. Yeah.
Well, I got the 10 with my wife.
Yeah, okay, come on. Give me that. He said that on camera as well. Make her watch this. Appreciate you coming in and giving us an update. It's been far too long. Well done with the money raised.
Thanks.
More importantly, really want to hear what you're doing next year and seeing you deliver those things. Could be a fantastic year for you.
Yeah, still got to wrap up last year because of the labs, but I think January we're really going to start laying out how 2023 is going to look, and we're excited.